Hey guys, Doug the retirement guy here. We got the update of the weekly paying dividend ETFs. We are now up to 24 different funds. We've bought them all. Show you guys how we did. Before we get into that, I want to thank each and every one of our subscribers and everyone who's joined us on the Patreon. You guys are phenomenal out there. We're just adding more and more subscribers every day. And on top of that, we're adding the Patreons almost on an hourly basis. I want to thank each and every one of you for supporting the channel and supporting us here. Let's get into today's video. Let's update you on the purchase of what was happened with this program that we've done. First off, we have the question, is this a good investment or a waste of time? Overall, it's been a good investment. It's been a good challenge and a good strategy come through. We've learned a lot, and I hope you have too, of what stocks we want to get out of and which ones we would like to grow into and see if we can't improve our performance. Now, remember, we bought all 23 funds on April 25th. We just added MST on June 1st for our 24th fund. We did that because they were only started with 3 weeks prior to us starting this program. So realistically, we now have $24,000 total invested into the fund, and each and every one of these dividends are paying weekly. Okay, so we have the reinvestment potential and we have the regular cash flow. So for this procedure, what we're doing is we're taking all of the dividends, we're putting them off to the side and keeping track of how well each stock is done and what we've done on dividends total. So let's take a look at how Defiance has done for the week of June 6th. And as you can see very clearly, QQQY is outperforming every one of their funds. You have 2 funds that are up, 2 funds that are down. So QQQY is up 7.184% so far since we started this program from April 25th. IWMY, which was doing so good last week, had a massive 6% drop in the value of their fund. That's the Russell 2000 that had the hit. Now, if you take a look at the steady runner, the S&P 500 Enhanced Options, WDTE, is up to 4.92%. It has a 1% gain, and it's just been slowly doing this over each week process. MST, guys, first week we get into it, it takes almost a 0.4% drop down. We're going to watch that one heavily. But right now for Defiance Fund, the QQQY is right where you want to have your money and where you want to be invested in, doing very, very strong performance. We look at the dividends coming out of it. Now, IWIM really turned around and is giving you good dividends, but it's just not growing. QQQY is giving you a good dividend, a 4.6% return on the money, but they're giving you a smaller portion. So if you want dividends, IWMY is there. QQY gives you a balance of both. So when we look at the dividends that we get out of the Defiance this week, we got $39.30. It is our largest week, but that's because we added MST. And MST, hands down, gave $14.99 of dividends, a 26-cent one. Plus, with the price that we're paying for the shares, we have 56 shares. We have more shares than anything else. So we collected quite a bit of cash from that MST, even with it being down the previous week. This is why most people are probably excited and loving MST. I'm hoping that we get in the next couple of weeks, we'll be able to talk more about MST and showing you that this is a fund that we'll want to be involved into. Total gain so far is $160.49. We basically gained almost 1 percentage point for the week. And for the year, we are forecasted to be 51% return in dividends alone. So again, these weeklies pay huge dividends. If we can keep our NAV erosion to almost zero, or if we can continue doing what we're showing you is that it's increasing and growing, this is going to be some exciting stuff to have in the portfolio. Roundhill. Now, this is the one most people are always talking about, Roundhill and YieldMax. Roundhill, we're going to take a look at them right now. And again, they were pretty much on the upper side of being in the upper class. That each stock this week has gone up. We have a few that did drop, but nothing that I'm going to say was out of whack across the board. So the very first one, again, that we're coming back is COIW, which we all know that is the coin-based ETF that they offer. It went down last week. It recovered. It came back about 1 percentage point, being up. So that is right now our current winner at a 13.03 gain from when we started this program. Some high notables that I wanted to put out there though is NVDY. Now, some of you were out there asked a couple of questions that you weren't able to buy when we had an NVW. Well, they changed the name and they changed the fund. They changed the name to NVDW instead of NVW. So they added this to it. Now that's the Nvidia basic that they're investing in doing call options on. So that thing has had some ups and downs in the past week, and you're seeing that it's paying off very well. It's a 5% gain for this week alone. And it's moved that thing right up to the top mark saying, hey, this may be one you want to be involved into. It will be a flexible account. It's going to go up. It's going to come down. What we're trying to find the things that are balanced for a retirement. We want to have balanced funds across the board. So we look at it, QDTE. Now this thing has had a positive, negative reaction to everybody's ever talked to. And we really come back. The whole 0 day options tradings, QDT is holding its own at 8.3, XDT at 7.06, and then RDTE at 7.25. Both of them all three of them are up this week. They are very solid funds. They pay good dividends. Just some really exciting ones to look at. Now I'm going to give you some downfall of some of this. Now, the very first one we're going to start off with is the AAPW. That one has been down week in, week out. It was able to gain a 1 percentage point upswing this week. We are still down 6% in this fund. It's just not performing the way we see it coming about. It is slowly trying to regain itself, but I really tell you guys, this is a fund that it would be probably my first one that I would throw out of this whole mix. It just is not performing. The next one we talk about is the Tesla options that they are doing. Now, you can see and you can read and watch the news day in, day out. Tesla is they're in the headlines more than they want to be. Elon Musk doing everything he's doing with the government, being out of the government, now fighting with Donald Trump, going back and forth. This is not helping the Tesla fund across the board. So this one is down 4.4 percentage points for us since we bought it on April 25th. It is down this week, and it is not just down a couple of points. This thing took a major drop, dropping almost, well, quite frankly, from 17.21%, as you see on the board, down to a negative 4.4%. That's a 21% drop right off the bat. The price tag is now $33.09. We're doing some running, we're doing some calculating, we're looking at some different things here and saying maybe it's time to jump in and buy TSLW and at a lower point. But that's not part of this experiment. This is not part of that game plan. This is something that we're seeing is how turmoil this stuff can be. So we're looking at things that we want to have consistency on and not be up, down, all over the place. So it got the red mark this week for our biggest loser across the board. We just really have to watch that part of it. Across the board, everything else, again, we go back to YBTC, just is consistently down, and everyone else is just having its little ups and downs program across the board. So again, Coin is the top fund at 13.03, but I give some high marks to the zero call options are out there, QDT, RDT, XDT. They're holding their own. So we got some evaluations there. We got some numbers that we can work with, and we know where we can be at with those funds. Now, when we get into the dividend side of it, again, the Tesla gave us huge dividends. That was the thing that got me. It still paid out huge dividends because they are making money on those ups and downs and that the volatility of the Tesla stock. But it wasn't our number one as of value. PTLW was the number one at 1676. Coin, $9.56. So again, they have a good upswing on the value of the stock, paying a fair price on the dividend. So if you're looking for dividend income, PLTY would be where you want to be. Tesla's giving the big numbers, but I'm telling you, you're going back to that wishy-washy type program. So out of the whole win of it, RDTE is actually the one where you want to put your money at. It's giving you a steady about 7% growth and giving you a $9 increase in dividend payout. But let's see, as a whole for us, we've collected $88.58, which is up a little bit from last week. The total collected is $421.47. We are getting about 0.81% per week return, and the forecasting program tells us that we should be getting a 41.87% dividend return. So Roundhill is a solid piece. They have a lot of options. They have a lot of different pieces to it. They're not paying as much in the dividends as other funds are. And we have some things that are a little more volatility. So you really have to hand pick your Roundhill investments and be very, very careful of what you do. So when we get to YieldMax, now I know there's a ton out there that people like and dislike, and some are excited about, and some people will never ever put $1 into it. But we take a look at this one right now, YieldMax. We go through GPTY is up 16.12% since we bought it. This thing continues to rocket. It's up almost 3 percentage points over last week alone. CHPY is really up 4 percentage points, almost 4.5 for this week. So it's a second one that just rocketed off the shelf. Now I gotta give some notice too of their QDTY, which is their version of the zero call options, and they're pulling up an 8.6. So they're doing very well. YieldMax as a whole was up across the board except for the YMAG. Everything else was up this week and recovering. Now the two big ones that we continue to talk about is YMAX and YMAG. Even though we are out of the money on them, we are down 1 percentage point and 2.5 percentage points across those boards. But what we like about those is we're buying now at the lower price. And this is not in this program. When I say buying now, we're buying into our personal account. We're buying into our investment accounts. We're buying more of those because the price is in our target range. It is below where we want it, where we think it's going to be. And we're able to hopefully capture more dividends. And in turn, we will continue with the upward swing and gain value across the board. So overall, YieldMax, getting back to this, YieldMax had a great week. They're recovering a lot of different places. And again, GPTY is the number one top fund at 16.12% growth rate. There is some value still in YieldMax that you can get yourself into and make some money on. Let's take a look at the dividend side of it. They gave us a $99.85 payout this week. We have collected a total of $471.25 in total dividends from them. When we look at this, we're doing what we just talked about. YMEG is paying we have shares right now, $18.79 a week from YMEG, and we're getting $15.65 from YMAX. Two of the highest paying dividend stocks that we have in our portfolio that are constantly paying back. I know we're going to get a lot of comments and different things about ULTY, how well it does. And you're right. ULTY pays big because the price was down, you could buy more shares. They're paying almost 9.5 cents per share, giving us $16.20. Overall, they've paid us more money than any other fund that's out there. So those big three, ULTY, YMAG, YMAX, those are things that you can be involved in. If you're looking for dividends, you can be yourself involved in those three funds and have great big returns in dividends, but you have to be able to watch your NAV with those at this point in time. If you buy at the right price point, this is what the whole thing we're trying to show here. If you buy at the right price point, you can keep and eliminate the NAV, and this is what you're going to gain from it. So that's why at the end here, we'll show you the buying parts that you want to be at to make sure you're covered. YMAX has given us a 1.1% per week per payoff and a 57.69% return for the year in dividends. So, you're talking 16 percentage points more than Roundhill, and you're basically talking about 6 percentage points more than the Defiance fund. So I'm not telling everybody to buy every one of these, but if you start cherry picking, you could get yourself in that 40 to 50% category of dividends and be very comfortable. But make sure you understand, never have more than 5% of your fund in anything that's into the YieldMax, Roundhill, anything in the weekly paying side of it. That way you don't lose much. You will gain a lot, but you will not lose much in a portfolio. So the summary for week June 6th, our stock value, remember we have $24,000 invested. We have gained basically $990 or 4.01% so far in a total of about 6 weeks. Our dividend income is $227 a week or 0.94% per week from our $24,000 investment. And we are looking, as an average across the board, we are really looking at about $11,841 of income from dividends, or 49.34% for the year. If we keep the stocks as they are, do nothing more, don't touch anything more. The only thing that's changed in this, remember, we had to throw another $1,000 to buy the MST. Hopefully, we'll start seeing some bigger growth in our fund. Instead of buying more funds, we're hoping to get some bigger growth. Now the top picks. We have two things out here right now. YMEG. YMEG is highlighted because it is inside the target pricing to buy in the YMEG package. Remember, even though the return right now is down 2.57%, we believe that this is in the price target range to buy into this to build up for dividend income, that you are not going to see massive NAV loss when buying into this. We are not putting anybody out there. We're not putting a gun to anyone's head to buy. All we're trying to do is give you some good advice that we personally are using and that we're doing, that the YMEG right now is in the price tag to do that. I will say also, if you look at a different video just on YMEG, we have a 25-cent buffer bouncing both ways. Okay, this thing could go down to $14.50 to $15 or to $14.75 to $15.25. Either way, the YMEG is actually noted that it's in the buy period. The COWI, which is a good pick for us because of a great return package and good solid dividend, but the pricing is going so high that I think we have missed any opportunity in COIW. We just would not invest any money unless we get back down to that $35 to $36 range, which I know will eat up our return. But we are also looking at what is the lower points that we want to be able to buy at so that we can continue on the growth. So that is one is definitely a strong one to play with because of the dividend, and it's got some good growth, but just again, it's out of our price range. YieldMax, this is a funny one. The YieldMax I just told you is growing and doing well. It is so close to our buying package, but we're not able to put it on the marker yet. Between $13 and 13.45 cents is where we really want to target this thing at. And I feel if you hit inside that target, you are not going to get hurt with NAV erosion. You're not going to have any problems going across with that one. But TSLW, this thing is down 4.40%. This thing has blown away and it is right inside the price target. You cannot miss on this one. I know TLSY, Tesla, is going to have a rebound back. They are too high of an organization. They are a technical company. They are in most of the Mag 7s. They are not a car company. They are a technology company. And I believe this is a time right now for any type of picks. TLSLY is where I would be putting some additional funds into and buying more shares. If it didn't mess up everything that we're calculating here with our program, we would be showing you that we would be putting money into the YMAG and the TSLY or TSLW, that we would be putting money into those to help show the improvements that we're going to make in our bottom lines. But those two are definitely our high points for the week. QQQY is gained the 5.85. It's got the decent dividend of 40%, but again, it's outside the boundary. So this is why we put this out here. We're trying to help you to see that the price targets that we put in there, they will come into these markets. And when you do, you buy and you make it work. Guys, this is Doug, the retirement guy. I hope you like what we're doing. Hit that like button. You guys know how to do this. Don't miss any of the videos. Hit that subscribe button every time. And again, if you like what we're doing or don't like what we're doing, put it down in the comments. We love hearing what you guys are thinking about. Everything helps the channel grow, and you guys are doing a phenomenal job. Thank you, and we'll see you next week.